Hi guys, this is Wave 618, and in this Elliott wave tutorial we're going to talk about another type of corrective pattern, well in fact two different patterns. We're going to talk about both triangles and zigzag patterns, so we've described them both here. Now, we did discuss in a previous video about flat patterns, and yeah, these are the other two patterns that make up the other correction patterns that are out there. So basically, for triangles, the subwave count is 33333. So it's made up of 5 subwaves. So it's made up of 5 waves rather, and each of those waves has 3 waves within it. Whilst with a zigzag, it's made up of 3 waves, and the wave count of the zigzag is 535. Now, I think we'll start with the zigzag, and then we'll move on to triangles. So, with a zigzag, it can be quite an aggressive pullback. Okay, so we often see them in wave 2s. So on a minor level, we would expect to see it in this wave here. If you watch my previous video about flat patterns, you'll note that I mentioned they usually occur here. As with triangles, triangles also often occur in this wave 4. Wave 2s are typically zigzag waves. Yeah. So let's imagine this is all a big wave 1 up, and now we're going to see a big wave 2 down. What we can expect is an impulsive wave A coming down, a corrective B wave, and then followed by another impulsive wave C. Alright, so if we're going to show the subwave count for these waves, we can expect something like this. So wave A will be made of 1, 2, 3, 4, 5 legs down. Wave B will be 3 waves. As we described, a zigzag is 5, 3, 5. So this is our 5. Now we're going to see 3, and then we'll see another 5 down. So this is our A, B, C, making up the 3. And then the final leg is 5 waves down. So 1, 2, 3, 4, 5. Okay, so that's an idea of what it will look like, breaking down the subwaves. Alright, so as you can see, it's quite an aggressive move, and a lot of people think, you know, is this actually a corrective pattern, or is it a new trend that's developing? It's often very difficult to tell. Just clear that up a little bit. So typically what we'll get is, in terms of Fibonacci extensions, we'll get wave C being equal to A. Okay, but there are actually lots of different Fibonacci ratios that it can go to. So let's just plot that. So if this is wave A, we do an extension from the beginning of wave C, and we can expect wave C to come to here, where it's a 1-to-1 ratio between wave A and wave C. However, it can come down very commonly to the 0.618. It could finish like that. The 0.786 is another common extension. Likewise, let's just make these, the 2.618, the 1.618 first of all is a common extension. Could go to the 1.382 even. It can vary tremendously. Okay, it really depends on how bullish or bearish the move is. The more bullish the underlying asset is, then it won't retrace as far. You can expect a 0.618, that's quite common, 0.786, or just a 1-to-1. Yeah. If there's not much certainty in this bullish move, you'll see much deeper retracements, maybe up until the 1.618. You can in fact see it come down to the 2.618. I have seen that happen. We'll have to adjust this to show it, because obviously this 2.618 is beyond the start of wave 1, so you can't have a retracement going that far. So let's just adjust our fib extensions here. So yeah, you could have it going to the 2.618. However, if you do see it coming this far, you have to ask yourself, why is it extended so far? Yeah, is it just a retracement, or is it part of a new trend coming down? And the only way to really know, after you've seen 3 legs down, the only way you can prove for sure that it is corrective is if you start to see an impulse wave coming up. So you expect a 5, 3 down, another 5 up, 3 down, another 5 up. Yeah, as soon as it crosses this point here at this level, you could be sure that it's impulsive. Yeah, you can be sure that this was corrective. Yeah, the other argument is that this was all impulsive coming down. For example, you can see a 1, 2, 3, and wave 4 doesn't overlap with wave 1, and then you get another leg down. Yeah, this then becomes impulsive. So as I say, when you see a zigzag down, it's very hard to distinguish whether it is a true corrective pattern or whether it's just an impulsive pattern. Because zigzags look like the start of impulsive waves up until this point here, it's hard to distinguish whether you've got a new trend coming down or whether it was the end of a correction and we're going to see a new impulse wave coming up from here. Yeah, but if you see a large extension of wave C in relation to wave A, you have to wonder, is it just a new impulsive wave coming down further? Yeah, so that's just one thing I want you to be very mindful of with zigzags. Yeah, but very typically the ratio that I look for is a 1-to-1 ratio where C is equal to A. Yeah, if you see anything other than that, I'll be seriously questioning whether it is a corrective pattern. That's the typical ratio you expect to see, 1-to-1. And as I say, zigzags commonly occur in this wave, but that's not to say that they can't occur in wave 4. You do often see them in wave 4 as well. All I'm saying is wave 2 is more likely to be a zigzag than any other corrective pattern. Alright, so yeah, that's pretty much it for zigzag. So it's a 5-3-5 pattern. As I say, it's almost like an impulse wave. An impulse wave, instead of 5-3-5, it's 5-3-5-3-5. Yeah, so the start of the zigzag can look almost identical to a impulse wave. However, in an impulse wave, as we say, wave 3 is usually extended. So if we see the third leg being extended, it's usually impulsive. Yeah, however, just be mindful, it can still be corrective. It certainly can. So it's just something to be aware of. Alright, now we're going to talk about triangles. So there's a few different variants of triangles, so we will be talking a little bit more about triangles for a little bit longer basically. So first of all, we'll go with a symmetrical triangle. With a symmetrical triangle, both the upper and lower line are sloping. So let's draw, I'm going to draw it first of all and then I'll explain it. So if we've got, this is our A, this is B, C, D, and E. Okay, and then the boundaries of our triangle are as follows. Alright, now the rule with triangles, only 2 of the waves have to hit each of the lines. So if this is our upper line, only 2 of the waves actually have to hit it. So I've drawn a pretty nice diagram where it's all looking very regular here, but in fact not all the lines have to hit perfectly. However, what you do expect is each wave to be getting smaller. So if this is wave A, B will be smaller than wave A, C will be smaller than wave B, and D will be smaller than wave C, whilst E is the smallest wave and smaller than wave D. Alright, now basically each wave, it can't come down lower than the preceding wave or higher. So for example, E can't come down lower than C. Yeah, that's a rule. Yeah, as soon as this breaks, it's not a triangle. Simple as that. Likewise with D, it can't come higher than B, otherwise it's not a triangle. Okay, and so on and so forth. So this is what you see with a triangle, waves getting smaller and the highs and lows contracting. This is what we call a symmetrical triangle, because the upper line is sloping downwards and the lower line is sloping upwards, i.e. both lines are sloping. Yeah, and the subwave count is 3, 3, 3, 3, 3, which basically means that each leg is made of 3 waves. So this is 3 waves. Yeah, they'll all be made of ABC patterns basically. So wave A is an ABC, wave B is an ABC, wave C is an ABC, D is an ABC, and E is an ABC. Okay, so that's the subwave count. So this is your symmetrical triangle, and from here, because it's a corrective pattern, as with any corrective pattern, the impulse out of the corrective pattern is in the direction of the impulse that came into the corrective pattern. So the impulse was going up, we've got a correction, and we can expect the next impulse to be up. Yeah, so we expect this line, this upper line of the triangle, to get broken, and then we expect a wave 1. Wave 2 can retest either this bottom line, an extension of this bottom line, or it could retest this downward trend line. Let's put it there, because there it was looking like wave 2 was overlapping wave 1, which obviously cannot happen. So yeah, then we get our breakout like this. So basically all I'm drawing is an impulse wave coming out of this triangle pattern. So that's what we can expect to see. Now, let's just get rid of that. So this is our symmetrical triangle. Let's delete this now, and we'll talk about the other types of triangles. So, because we're seeing a bullish trend here, the next most common type of triangle is what we call an ascending triangle. So with an ascending triangle, we get higher lows each time, and we get a flat horizontal line of resistance at the top. So this is A down here, B, then we get C, D will again retest this high, and then we get a final E here, and then we get a breakout. So as I say, the upper line is flat, whilst the lower line is ascending. We call this an ascending triangle, and what we expect from here is an impulse out. Why is it not drawing properly here? Okay, so we get a wave 1 out, often retests this line, then we get a 3, 4, and 5. Okay, so that's our impulse wave coming out. Right, so this is an ascending triangle. As I say, we're getting higher lows, which is what we often see in a bullish market. Obviously this is bullish, the impulse wave is going up here, and yeah, we often see this higher lows but a resistance line here, yeah, forming an ascending triangle. Alright, so the last type of triangle is a descending triangle. Now these are more common if the market is trending downwards, but for these demonstrations I'm just showing it in a upward trending market here. But yeah, you can see the descending triangle in an uptrending market. So what you'll get is wave A, and you'll get lower highs. So B will only come to here, C will meet this horizontal resistance here where A was found, D again will form a lower high than B, and E will again find support at this horizontal resistance level, and the lines demarking our triangle can be shown as follows. And from there, we can expect again to see our impulse to the upside. So this is what we expect. Yeah, with these corrective patterns, triangles in any upward trend, we expect them to consolidate like this and then break out. Now, what we often see with triangles, well, first of all, just so we're clear, with a triangle, no matter what variant of a triangle, whether it's symmetrical, ascending or descending, each leg is made of 3 waves. So we've got 5 waves here, A, B, C, D, E, and each one has a subwave count of 3 waves. So there's A, B, C down, A, B, C up, A, B, C down, A, B, C up, A, B, C down. Before you then see an impulsive leg out, that's a 5, 3, 5, 3, 5. Yeah, that's the wave count we look for. And also another important indicator to tell you that you are in a triangle is that the volume is falling. So from here you expect the volume to fall, 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 fall until this point, and you usually see the volume come in once the upper trend line gets broken. That's when the volume really comes in, and you'll see quite a strong move out. This will be a breakout. Yeah. All right, so that's pretty much for triangles. One thing I want you to be aware of though, often this leg can be difficult to determine whether it is 3 waves or not. So what I'm saying is, you need to be sure that this is 3 waves before you can say it's a triangle. If there's any doubt, for example, if you're not sure but you think it may be 5 waves down here, you can then get a triangle, but it might be a triangle for the trend going down, in which case you may get a leg coming here, 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 and then you'll get 5 waves coming down. And in fact what it turns out to be is a zigzag. So you've got A like this, the B wave is a triangle, and the C wave is again impulsive. So zigzags, as I say, they're 5, 3, 5, but basically what it means is when we say 3 for the wave B, it basically means it's a corrective pattern which includes triangles. So that's a little bit misleading. It is actually a 5, 5, 5 here, but yeah, we still call it a zigzag pattern. Alright, so that pretty much sums it up for triangles. As I say, you've got to be sure that this is 3 waves down if you're calling it a triangle. Yeah. Otherwise it could turn out to look something like this, in which case it could break to the downside. Yeah, so this is why the wave count is so crucial in Elliott wave trading. Yeah, so that pretty much sums up triangles and zigzags. There is one other variant I will explain. It's not a pattern that I particularly look out for, but it can happen, so I'll just explain it. There's something called an expanding triangle, and the way an expanding triangle looks is like this. So instead of the waves getting smaller each time, they're actually getting bigger, and that's hence why it's called expanding. So we get the B up here, C, D, and E. Yeah, so it's still a triangle, but the triangle is going in the opposite direction. Yeah, it's an expanding triangle. With time, the triangle is getting wider. Yeah, so this is an expanding triangle. You can see it. You do see them, but it's not my preferred pattern to look out for. They're not that common. As I say, these symmetrical triangles are very, very common. not so much these expanding triangles. Alright guys, so yeah, that completes the other simple corrective patterns that we see. So we've discussed triangles, zigzags and flat patterns. Now I will make a video explaining about more complex corrective waves, which basically consist of a combination of patterns. For example, a double zigzag, a triple zigzag, or you can get a zigzag followed by a flat pattern. There's lots of different combinations you can get. Yeah, so it does get more complex, unfortunately. And as I say, mastering the complex wave formations is the key to mastering Elliott wave. Alright guys, so I'll leave it there. I'll wrap it up, and yeah, so take care.